Good afternoon, this Tuesday, January 27th. Well, today's charts, they're kind of interesting charts you need to view, especially with the US dollar now on the verge of breaking down. This will affect agricultural commodities. The gold and silver have been exploding, all the other metals, but they have their own purposes to explode. But along with the currency connection, we have grains that are going to start to get affected by it. First off, I should tell you this afternoon at 3 o'clock, President Trump will be speaking in Cleve, Iowa. It's next to Des Moines. He will be probably talking about something for the EPA announcements upcoming in March, or the possible Washington has now signed off the White House on the 45Z. Maybe he'll talk about that. We'll see. We might get some support tonight in the bean oil market, which went out looking pretty good today. Corn two-day correction, I think that's a buy. We'll talk about that here as we get into the charts. So let's get started. Well, the first one is US dollar chart, and notice the weekly chart fall out of bed here that we're doing. Federal Reserve meets today. No interest rate movement is anticipated tomorrow, or maybe will there be? Of course, this has a lot to do with world events, geopolitical events, and of course, gold and silver exploding while the dollar is falling out of bed. Triple bottom, can it hold? If we look at the monthly chart, here's your triple bottom. We are literally ready, going back to 2014, masked with the COVID low trend line. Look at here, hit the low back in early 25, hit the low again during 25, and now we're under it today, but this is a monthly chart. This chart doesn't close until Friday's close, and so it'll be interesting. If we're under 96 on Friday, this implies a breakdown. I mean, basically, we hit a plateau rally, hit a plateau, have bounced, can't get back above that plateau, and I'll erase all my hieroglyphics here, and we're falling out of bed again. You know, grain prices rallied end of 2021 with that great Chinese grain robbery of our corn. And then, of course, we had the rally that precipitated after 2018. President Trump struck the deal with China, and of course, grains were rallying, and this supported us. So weakening US dollar is helpful to grains, and maybe this is a little bit of a spark to at least get index funds to get out of their shorts. Massively short wheat. And is this possibly what's going on here? This is Kansas City wheat, the daily continuation. My apologies, I zoomed in, so I don't have my Kansas City wheat across the top here. But I wanted you to see 3 closes at or above the 200-day moving average. That's what the blue line is here. Yesterday closed right on it. They tried to wreck it this morning. They couldn't do it. Brought it up on the close. Are the funds buying into wheat to get out of their wheat shorts because the US dollar is falling out of bed? If you're getting value from this video and want more, just check out our daily newsletter. Each morning, we send a market summary to start your day, plus deep dive analysis, trade alerts, breaking news, and videos just like this. Whether you're a farmer, trader, or just tracking the markets, it's a great way to stay ahead. Start a free trial by scanning the QR code on screen or clicking the link in the description. Call us at 701-222-0221 or visit heartlandinvest.com. Let me show you this here. You have to go back. I said on radio today 7 months ago. No, it was 10 months ago that we were able to cause at least a rally that was more than 3 days above the 200-day moving average before they wrecked it. Now we've been just keeping it to 2 days, wreck, 2 days, wreck, 2 days, wreck, on and on, 2 days, wreck. They couldn't wreck it unless they wreck it tomorrow. We bought it on a spec trade through a stop under this low here. See if it holds. If something's coming here, we're going to run right back up to 545 to 549. And if we take that out, we get a little funky in here. So the bottom line is, can we rally in here? Let's do one more cute chart. How about taking a trend line and on the continuation and topping it with June of last year, crossing it with the November high? It certainly spiked it in early January, spiked it here the other day on the cold weather. And now we're actually, if I zoomed in here, we are closing above it today. So we'll see. Something might get underway here. Maybe it's index funds coming out of their shorts. They are big time short. You know, we've thrown so much bad news at it. How can you get this thing to go any lower? This is the March Chicago wheat chart. And here we are, 2-day pullback on top the 40-day moving average. This is the 40-day moving average. 40-day moving average. Interesting stuff here. Interesting charts. Index funds, I think that's our ticket. Beans, interesting. Big outside day down yesterday, higher high, lower low, lower close. And I had said in yesterday's newsletter, sorry it got out late today. It got hung up yesterday. I thought it went out yesterday. Anyway, we had said watch for a rally today because the algos, they get so crazy on themselves, there's no follow through. There was no follow through. Now, we did stop today at the 200-day moving average on the March bean chart. But the soybean daily continuation chart, which is looking pretty fine, double bottom here. Gap was plugged exactly at 1038, and the market turned right up when it hit 1038, came down to 1037 and 3/4 on a bad close and straight up. Well, we're above the 200-day moving average. Here too, we'll see what President Trump says. Maybe we get some help from soybean oil, which is still right back to its best levels of the year here at today's action. Maybe it's because he might be talking something friendly. I will note that on the intraday chart, daily continuation, 2-hour chart, we went positive again. Of course, as you can see, this thing's pretty directive. Then we hit some chop suey here in January. But despite all the bearish news from WASD, that was the first of the year low, bearish WASD, we're still wanting to take a look of upside movement. I like that. So the daily continuation chart, getting friendly, start pushing higher. This was a wave 1. This is a wave 2. South America. Oh, yeah, I was going to load you and show you the hot, dry temperatures in Argentina. And, oh, there's more rain in the forecast. Farther out again, there's near-time rain, near short-term here with some rain, but it's widely scattered, nothing heavy, and it's a disappointment. This could be the reason we start lifting here in the bean market. Whether we're going to push right on through 1169 here, we shall see, but it'll be interesting. We get back up to here, 1078. You're going to have the July beans above $11, and that's going to be looking kind of interesting. Corn. Well, I think this is wave 1 up. We had the USDA throw massive yield data at corn, and what does it do? Hold the 786, eke lower the next morning on a Tuesday, makes a low, back above it. Doesn't look like much last week, but does a nice spike high on the cold weather, logistics, pulling back mildly here, 2-day pullback. In theory, corn's a buy tomorrow, but we'll see. Could pull all the way back to 23, 24 in here and do a wave 2 as we continue to do like soybeans, 1, 2 inside of a larger 1, 2, and now we start 1, 2, 3, 4, 5 up, possibly up into a 3 up here. My target has always been that 465, 470 range. Still could be doable. Last year we made our highs in February. Seasonally, we make our highs in April or May. And China, when they come back from holiday on February 17th, just might be buying corn from us. Remember last week's video, I showed the disparity of corn in China at 6-month highs, while U.S. corn sitting here near 5-month lows. So something's cooking. I even see old Jerry Gulke. I didn't realize he was still writing anything anymore. He's in Illinois now, but he was born from North Dakota. Wrote a newsletter, and I heard he was friendly corn in Ag Web or somewhere. So, well, he can join us. I've been friendly corn. I've been friendly corn since August of last year. It's just taking a hard time to work through all these bigger and bolder and big, beautiful corn yields that the USDA keeps finding us. And still, we have hope in here. So we'll look for forward movement, corn continuation chart. See this 200-day moving average? Well, there's trouble here. It was support here. We fell underneath it. So I'm sure there'll be a little trouble at 432, and then we got 436. We got a lot of work in front of us, but boy, you get above 437, like I said in yesterday's newsletter, which you got today. Above 437, we're going to start crowding some upside movement. Something will be going on. Crude oil, maybe this is part of it. Crude oil would not get back under moving average resistance for more than a day or two, and we had noted that late last week. Something's still going on. Maybe we can get up to 64, and we get another 2-wave, wave C, from a 1A, B, C. Could go to 64, maybe as high as 65. It just can't close above this high here, above 66. Then we move back lower again. If we show you Elliott, the heating oil chart, well, no, we did buy some tax buying back here, but we didn't buy all our spring needs up on that. But have no fear, heating oil is here. It loves to spike. Here's January of last year. I've been saying that it spikes for a couple of days, collapses. Spikes in June, collapses. Here's another little spike collapse. That was July. Spikes in November. I talked about the collapse. It was going to be hold into the end of the year, and she did it. So now we could spike up here for a few days, and then we'll see. Get another break. Then we could get some summer fuel bought. Should have been a little more aggressive here, but that's the part about trying to foretell the future. You have an idea, you just don't know if you should go all hog. And you know what happens to hogs. Bulls make money, bears make money, hogs get slaughtered. This is Eugene Grainer with Heartland Investor Capital Management. Hope you find this information useful.